Absolutely insane to watch this Bitcoin daily chart play out before us as the Bitcoin bulls strive to get a breath of fresh air. And we compare this chart on the daily to the daily chart at the bottom of the 2018 Bitcoin bear market. This is important whether you hold Bitcoin or not, any altcoins. This is our navigation roadmap for this bear market. We're going to dive in, dig into that. And also ADA. This is ADA in the 2018 bear market low after plummeting 36%. This is a 6-hour chart. What does it have to do with the 6-hour chart that we're watching on ADA right now? The similarities are pretty crazy. I want to dig into that and talk about ADA and the macro and what's going on with ADA, even on the short term. So let's start here for context on my very, very messy Bitcoin chart. It's messy, but it makes so much sense. The last bear market low to bull market high, the green channel, the Fibonacci retracement channel, the 786 line, right down here, around $17,000. Many of you probably sick of me talking about it. I've been tracking this for years. This is my favorite macro indicator. It really does mark, so far, historically, the bottom of bear markets. And so far, we've fallen below the 786 range. So you know I'm sitting here and I'm waiting for crypto to bottom. We're in the range. Could be weeks away, could be a few months away, but I think we're in the range. And remember, this is just what I think. This is how I see the charts. But needless to say, we've bottomed below that 786 before, and then even back here in 2015, we bottomed below that 786 line. So why is that important? It's important because we're digging into the charts now. This is the yellow line, the 786 line. This is what it looks like today. The daily chart, the setup that's happening, the consolidation that's happening, so similar to what happened back here, 2018. So I just want to start here by saying this. What we're looking for Bitcoin to do, the exit of the bear market, is pretty much what you see here in this green candle. Not saying it would look the same, but that explosive move out of and just away from that yellow line, that Fibonacci retracement. This is 2018. Notice what it was doing prior to that move. It was testing it, kind of just making a move towards it, but failing to get above it, right? And during that time, Bitcoin, you see these moving averages, a 20-day wrapping around the blue one, the 50-day, right? So the 20-day and 50-day kind of dancing with each other a little bit for a while, for months, during the bottoming out phase. We go to the Bitcoin chart today, and the setup is starting to look extremely similar. Now, you can see Bitcoin actually popped above the 786 line very briefly, but it failed at the 50-day moving average. This is something similar to what happened back in 2015. Bitcoin popped above it briefly as well and then fell back below. So this isn't the move we're looking for. There was no real momentum, and it fell very quickly back below the 786. But start noticing this setup. We have the initial swing low back here in November. And then if we look at 2018, we had the initial swing low back here in December, and then just consolidation, right? Higher lows all into the bear market bottom range and then exiting. So here's the setup so far. Whether or not it plays out exactly the same, time will tell, but the moving averages are what I'm watching right now. You see the 50-day moving average kind of crossing below the 20-day moving average right here in green. So 50-day crosses below. Most recently, let me zoom in so we can see this a little bit better. The 50-day back above the 20-day. And what we're looking for is a 20-day to kind of make its way back above the 50-day. That's what we're looking for. This could take a little bit of time, right? This could take weeks, but that's the setup we're looking for. Right now, Bitcoin trading above both moving averages. This is the very first on the very short term because it's a small range. The very first thing that I'm just watching, can Bitcoin maintain closing candles above both moving averages? Because if it can, and if it actually start getting a move to the upside, and this range right here below the 786 is around 3% range. It's not a big range. If it can just start putting in some short-term higher highs and higher lows, we'll start to see this 20-day moving average, and let me clear this, the green line, we'll start to see it start shifting above and back through the 50-day moving average. That's what we want to see, because the move that we're waiting for, at least the move that I'm waiting for, I should say me, because this is what I'm watching, the move that I'm waiting for is what happened in 2018. We have a similar thing, 50-day falling below the 20-day, back above the 20-day, and then boom, here it is, the 20-day moving average crossing above the 50-day. An explosive move to the 786 is what did it. 20-day moving average, and then what happened? Bitcoin consistently closing candles above this 20-day moving average, and then the explosive move through the 786 line. Many of you are like, why are you sitting here talking about exiting the bear market? And there's a great benefit in doing that. To visualize what it looks like, we can very, very simply visualize and know also what resistance and failure looks like. And that's why I do it. Obviously, I want the bear market to end. I would love bullish confirmations all over the place. But if it doesn't end, guess what? It's not ending because we're getting very clear bearish indicators, very clear resistance. 786, if it makes its way, it's not even a big move, 3% move for Bitcoin. Is there resistance there? It would be so common. It would not surprise me at all if the bulls fake us out a little bit, come back down again, and then, you know, the moving averages are tested again. But this is what I'm watching on Bitcoin. This is the slow setup of a bear market formation. I realize that there's a ton of room to the downside still. I talk about that very often, but in this video, since we're in such a small range, I wanted to discuss the setup because it's so similar to the setup in 2018. All in all, put this aside, we are watching traditional markets. Here's S&P 500. It's in this series of downfalls, these lower highs at these midterm Fibonacci retracements. Most recently, this resistance. And you can even see the 20-day moving average crossing below the 50-day moving average on this chart, the S&P 500. So we really need to see the bulls do something different now through this bear market that we've been in and start stepping up, maybe retesting even this Fibonacci retracement once again. That's something it has not done in these previous lower highs. So that's something I'll be watching. Cruising over to ADA. First thing to note before we dig into 6-hour charts today and even in 2018, 32% away, everybody, 32% away from this green line, the 20-week moving average. It is the most important line. I repeat myself a lot. I get it. But when I'm opening up these charts to analyze, foundationally, I have to just remind myself, well, where's the macro bullish confirmation sit? And this is where it is. And that's not to say it means the bull market has started when Cardano ADA breaks the 20-week moving average. That's not what that is. But it's a confirmation that the momentum truly is in play and the bottom structure formation potentially really has arrived, right? Because we have had no structure at all through the bear market. And it's because if you look at this, the 20-week moving average has just been resistance, lower highs all the way through. So we start getting a picture of what that looks like over here on the daily chart. So circled right here is on the daily where the 20-week moving average is, right? It's right around, what is it? It's right around 36 cents. So over here on the daily, that circle is the 20-week moving average, 36 cents. And before that area, note this area, the blue line, the 50-day moving average, huge resistance for ADA. And this is truly, on a zoomed in scale, the big bear in the room. Every week, every video that we've been talking about, these moving averages, these two moving averages, the 50-day in blue, the 20-day in green, ADA has failed just the entire bear market. For over a year, we've watched ADA fail. So every time we start testing these moving averages, and that's what we're doing now, I really enjoy and I like to track it. I just really do. I want to be here and I want to have documentation of tracking the bottom formation of this bear market. I say often, I think there's very likely another leg down. I say that often, but I also know data-based that the bottom could be in. It could be in a few weeks, it could be a few more months. But with that being said, we're getting close. The urgency for me is becoming very real. And so right now, if we could say the bottom might be in, even if it just starts going sideways again, comes back down to 24 cents, if the bottom were in, I really, really want to track this on the short term. And what's really interesting is we start tracking like 6-hour charts like this one that you see here. The setup back here in 2018 in the bear market low, somebody could have been doing TA on this ADA chart, doing a video saying, hey, maybe right here, the bottom could be in, everybody. And I just know, I don't know if it happened or not, but people would say, you're crazy. The bottom's not in. Another leg down. ADA is going to a penny, right? This is what happened in the last bear market. It's what's happening now. And so, but look how underwhelming the bottom was for ADA. And this is after it fell. Basically, it just got done falling around 40% in like not that long of a time, 40% in like a couple weeks or so. And then all of a sudden, just like that, nobody knew it at the time during this ridiculously underwhelming formation. Nobody knew it, but the clouds were getting ready to shift away and the sun getting ready to shine as ADA just had its moment and its breakout as crypto broke out of the bear market. And it just came out of nowhere. And so when I look at charts like this in the 6 hour, I'm not trying to have any type of hopium, or I'm not sitting here hoping that the bear market's over. I know I would really be awesome. I really would enjoy that because I'm sick of the bear market, like most of you probably. But I say it because I want to track it and I want to be ready for it. And I think it'll be really cool to sit back one day and look back, whether it's this chart that I'm charting now in the 6 hour, and I'm going to talk about it, I'm going to dig into this, or not. Maybe it's a formation that's down here, right? I want to look back and say, you know what? I tracked that and I hustled through that and I had my plan. You know, I stuck to my plan through that moment. So needless to say, here we are with this 6 hour formation. If it plays out like 2018 and we get a breakout to the upside out of the bear market, amazing. But you all know we should probably prepare for the opposite, anticipate the opposite at the very least. I think it's more cautious to do that. But this is the inverse head and shoulders that we've been discussing. Last video, we talked about it, maybe getting some resistance here and setting up a right shoulder. And you can just see right now as I do this video, there's been no right shoulder setup. The inverse head and shoulder has not really completed. So we can't really track a target, the speculative target we had around 30 cents. If there's any pattern here, it's more of like a broadening wedge of some sort, but the upper trend line is not really falling or anything like that. It's just a broadening wedge, right? Just some lower lows, this line at the top, which is very sideways, and we're getting a breakout to the upside. I would say 28, 29 cents, probably a nice breakout target for that setup, but it's a very underwhelming setup as well. Very similar actually to what happened back here in 2018 bottom. So there's breakout target to the upside potential. Let's just call it 28 to 30 cents. If we go to the daily chart, that's important because on this daily chart, right around 28 to 29 cents is the 50-day moving average. And this is we called it the big bear in the room throughout this entire bear market. So we get a nice pop to the upside. That's all good and dandy. You know, we've gotten gains on the daily chart of maybe 20%. But again, this could be a continued story of lower highs. This is where the caution really needs to just come in. Now, if we start seeing ADA break above this target, that's what we really would want to see. Just not only reaching the target, but actually just maybe a slight consolidation there, but then continuation. That could be a sign. If we get any signs on the short term, and they don't come often, that could be a sign of something bigger happening, something like that. And actually, if you look back in 2018, when we had this very underwhelming setup, we kind of got the breakout to the target, which was like 3.5 cents. And you can just see kind of sideways right here for a moment after hitting its target. You see the resistance in that wick right there, boom. And then it just continued to the upside. The bulls really stepped in. They came out of nowhere. They probably surprised a lot of people with this move right here. I mean, that move for ADA from that swing low here to that swing high, it's an 81% move. Can you imagine a move like that coming out of nowhere for ADA right now? What would that look like? From its swing low to swing high, 87% move. And let me bring this chart. 87% move brings ADA to 40%, 40 cents plus. And if we go back to our weekly chart, what does that mean? It means we're breaking the 20-week moving average, and that's a key macro move for ADA. It's what we want to see ADA do. I'm not trying to throw hopium, but truly, whether it's now, whether it's in March of 2024, that's the move we're looking for. That shift from just short-term bullish setups into just this macro move through key indicators that act as resistance, namely this 20-week moving average right there. And then we have other things on the charts to discuss as well, but that's one big thing that we can really just kind of hone in on. So that's what I'm watching for ADA right now as we kind of analyze these short-term charts. There's a lot of speculation here, obviously, but it's fun for me to track these things. It's literally why I started the YouTube channel. So if you get any value from this data, Bitcoin, Cardano, whatever, hit that like, hit that subscribe. I really just appreciate you still being here in this bear market, hanging out with me. And I hope you have a good night. I'll see you in the next video. God bless.